Good afternoon. Welcome, everyone. Good evening, good morning, wherever you are located and watching us right now on this live webinar. My name is Arlen Muchai with InsurTech Hartford. This event is our very first digital InsurTech Hartford event, and it promises to be a great one by the number of signups that we've seen so far. We have a great lineup of speakers and insurance leaders in the insurance industry. So I'm really excited to bring all this information with you guys today. We hope everyone is safe and sound at home. That's primarily the first concern. And we're going to talk about a very timely and important topic, the implications of COVID-19 in the life and property and casualty insurance industries. A little background about myself. I work for Hartford Steam Boiler, which is a Munich Re company. And part of my responsibilities with HSB is intelligent automation product manager, as well as process excellence lead for the HSB IT organization. Before we jump quickly into the agenda and cover how the topics will be presented today, I would like to just provide just a high-level overview of some of the logistics. I know as you came in, you were all muted, but you will have a chance to ask questions during our sessions. And that will be primarily at the tail end of each topic. We have reserved about 10 minutes for each session for open Q&A. That will be administered through Slido. We've partnered with Slido for that functionality, and you will see the login credentials at slido.com, entering the participant code IH for InsurTech Hartford 0507. I would highly encourage folks to log into slido.com right now, just to make sure as our folks, as our presenters are talking about the various topics, you can jot down the various questions that you have. So briefly cover the agenda. We're going to have opening remarks by the founder of InsurTech Hartford, Stacy Brown. Once Stacy concludes his opening remarks, then we'll jump into the sessions. The first one on the outlook for the life insurance industry based on COVID-19. And that will be roughly about 30 minutes worth of information. The first 20, talking a little bit about the topic, and then a moderated fireside chat. Then the last 10 minutes with the audience Q&A. Followed Matt and Bruce's speech, then we'll jump into a startup spotlight from Harbor AI, and welcoming us will be Paul Gagliotti, the founder of Harbor AI, which will be covering that startup spotlight. Once Paul concludes his presentation, then we'll jump into COVID-19 technology role in response management for impacting the property and casualty insurance. And that will follow a similar format to the one above that, with 10 to 20 minutes of open discussion regarding the topic with fireside chat, and then concluding with audience Q&A the last 10 minutes. Throughout the time, the Slido application will be up and folks can ask questions. In addition, on the second topic, we will have actually a planted poll for folks to attend, which will be available during that session's time. Please keep in mind for Slido, there is an option to choose which session you want to ask the questions. So please click on the right session when you're opening up Slido and entering the participant code. And we will conclude today's event with some closing remarks and any last questions that folks might have before we conclude the webinar. With that, I would like to invite Stacy Brown, the InsurTech Hartford founder. On to you, Stacy.
Thanks, Arland. Great job. And welcome, everybody. Welcome. It's our first digital event. And so we're learning as we go here. So apologize also if there are any hiccups. But the first thing that I'd just like to let everybody know about, if you haven't already heard, is about the InsurTech Innovation Challenge that we're running. So right now, applications are coming in, and we'll accept applications until next Friday, May 15th. And there's three main prize category areas. There's Beasley Insurance offering first prize for their most innovative Beasley breach response solution. And Travelers is also offering a prize for Best Self-Service Award. And there's also the Best Emerging InsurTech Innovation category. So we're seeing good traction with this event. And hopefully those that are holding out to the end, you got about a week left. And you'll have, if you're lucky enough to win, there's a $10,000 cash prize for each one of those awards, plus a bunch of other things, which you can see there. So if you need more information, feel free to go to insurtech2020.info or reach out to myself or any one of our members, and we'll be able to help get your questions answered. But thank you about that. So the next slide. So the last thing I'll let everybody know about, there's a few things coming up. One is InsurTech New York is having their next event on May 21st about data and analytics for better claims and underwriting. And it's about a 5 or 6 hour event, lots of different speakers and things going on there. So hopefully you have a chance to look at that. And if you haven't seen already, InsurTech Israel is actually running a virtual exhibit. It's an online virtual world where you can go in and see different exhibits and click in and see videos and interact with the different exhibitors. There's 26 InsurTech companies altogether. So I put the bit.ly link on there, but you can also go to InsurTech Israel's website and find out more about that. And then the last thing just to let folks know about is we've got the InsurTech Hartford Symposium on target for November this year. And indications are right now that we'll have that event, and we're going to continue working towards it. So if anybody's interested in possibly being a speaker or a part of the startup activities, you can also reach out to us. And if you're interested in becoming a sponsor, you can also reach out to Deb and Mark. And that's really all I had. And I'm really excited about this. And I wish you all luck. And Arlen, it's back to you.
Thank you, Stacy. Appreciate the updates. And again, as a reminder, please check out that Innovation Challenge. We've already received so many submissions and would like to welcome more. So before I hand it over to Matt and Bruce, I would like to briefly introduce them. Quick bio. I've introduced Matt Josefowicz. He is the current president and CEO of Novarica, which he founded back in 2007. And he's worked with over 100 insurance CIOs and senior technology leaders to identify them and advise them on different IT strategy and solutions, as well as technology challenges that they might have. He also worked prior to joining Novarica. He worked at an analyst firm, Salent, and worked as a hedge fund with D.E. Shaw & Co. Introducing along with Matt, we'll have Bruce Friedland, who is currently the Senior Vice President, Chief Product Owner, and Chief Actuary of Vantas Life. Bruce has over 35 years of experience in various degrees, as well as primarily working on the life and annuity space. He's done different organizations, both large and small, and now as part of Vantas Life and that senior leadership team, he is primarily looking to increase the product development and company's digital customer experience strategy. So with that, I would like to welcome Matt and Bruce. Take it over.
Great. Thanks very much, Arlen. Before we get into the conversation, I wanted to talk about a couple of trends that we're seeing and what we're projecting in terms of what the after times are going to look like. So obviously, we're all in a disruptive period right now. We're not sure how long it's going to last, sometime between probably 3 months and maybe 12 to 18. And then there will be some next normal that will not be identical to what we left behind, but will probably resemble it, a hybrid of what we're living through now and what we left behind in the before times. So a couple of things as we look at life insurers specifically. First of all, life insurers were having a challenging environment to deal with even before all of this happened because of a decade of persistent low interest rates. And that has made it extremely difficult for life insurers to come into balance economically and to fulfill the promises that they've made based on a very different set of assumptions about interest rates. So that's putting pressure on operating models, on cost structures, on product design, on the ability to create compelling products when you have to model against low interest returns. So even before all of this happened, life insurers were facing a very challenging environment. As we move into what's going to be some form of recession, hopefully it will be a relatively short, quick recovery one, but that's still very much TBD. Life insurance's position as part of the wealth management space makes this an even more challenging environment. Obviously, it's difficult to sell wealth management products when people are feeling less wealthy. And with the markets in turmoil, with corporate results heading into the recession, with people's investment portfolios under pressure, many of the products in the life insurance industry are going to be facing headwinds from a market point of view as people are concerned about their overall wealth management strategies. Obviously, there are some benefits. You know, turmoil in the markets often creates increased demand for fixed annuities. And just to be vulgar for a moment, media that is spending a lot of time talking about mortality risk can certainly increase demand for those products. And we have seen some insurers, especially those with effective digital distribution processes, able to capitalize on the upswing of interest in some of the standard life products. Speaking of distribution, we're seeing very much a bifurcation of the industry right now into those that have effective digital distribution during this crisis period and those that do not. Companies that were dependent on paper-based, face-to-face sales processes are frankly seeing their sales fall off a cliff over the last month or so because these interactions are not happening in the same way, because the sales process is inhibited, because fluid-based underwriting cannot occur under current circumstances. Companies that have not adapted their distribution models are in a lot of trouble right now. On the other hand, there are several other companies, many other companies that have embraced a more digital distribution flow, not necessarily direct distribution, but a digitally enabled agent channel with additional options for underwriting that are doing very well. And the thing about this natural experiment in disruption, you know, we've been talking about innovation and disruption in the insurance industry for the last 10 years. We're living it right now. This is disruption that will spur innovation. You know, I've been talking for almost a decade about the potential to do fluidless underwriting based on enhanced analytics. There was an article in the Wall Street Journal that I blogged about at the end of 2009 of a successful pilot project in this area, and the industry has not widely adopted it because it hasn't been forced to. And there was a lot of cultural inertia and a lot of organizational inertia that inhibited innovation, essentially, where people were more comfortable doing what they did yesterday than trying something new tomorrow. And if there is a silver lining to what we're living through now, it's that what we used to do yesterday is no longer viable. So let's all try something new. And lo and behold, a bunch of life insurers have now decided that, in fact, their risk tolerances allow them to do fluidless underwriting because they can't possibly do fluid-based underwriting at the moment. This is interesting because one of my more senior colleagues pointed out to me that life insurers only really adopted blood testing as part of underwriting in the 80s during the AIDS crisis. And it was something that was intended to be a temporary measure that the industry then got reliant on and never rethought. So if there's one positive silver lining to what we're living through now, it's that it's giving us the opportunity to rethink all of our assumptions. Some of them will still be valid, many of them may still be valid, but a lot of them will no longer be valid. You know, we like to think about every business process as essentially an artifact of the state of information technology and consumer preference at the moment it was designed. And very few business processes are continually reassessed in the light of new developments in either technology or market need. And this is forcing many companies to reassess not only their external processes with distributors and customers, but also their internal processes in terms of how they do business. And some companies are very well equipped to adapt to where we are now, and some are struggling. And in most cases, a lot of it comes down to, have they 100% digitalized their business processes, or have they 85% digitalized their business processes and avoided the last 15% because it wasn't necessary or cost effective given the assumption that people in paper would always be accessible. Now that that assumption is off the table, the calculus has changed in terms of driving those processes forward. So when we're thinking about the state of innovation today and the openness to working with InsurTechs and emerging technology, we see certainly a pullback from blue sky innovation and what we call exploratory innovation. At least 30% of carriers in our current survey are reducing their overall innovation initiatives or pausing their overall innovation initiatives. And it's especially those that are tied to innovation without targeted results. But those that are using what we call the 3 levers of value, the goal to either sell more, manage risk better, or cost less to operate, and thinking about what is the role of doing things differently with different technology in achieving each one of those goals. Those companies, in many cases, have an increased impetus to move forward with their disruptive and innovative thinking as the world is disrupted around. So with that as kind of a preamble, I wanted to introduce Bruce and start the conversation. Bruce, can you introduce yourself a little bit and talk a little bit about your background and your role at Vantis Life?
Sure. Thanks very much, Matt. As Arland had mentioned at the beginning, I'm the chief actuary at Vantis. I'm on the senior team and responsible for our product development work. I've worked at a number of different companies in the area on a lot of different things over the years. The things going on at Vantis, I think, that are interesting for this audience is the whole digital experience and the customer service that we're doing through the digital channel. We have an all electronic process there, both for agents. So it goes back to your comments, Matt, about how agents are able to maybe keep on going through this situation when they, whether if they're paper-based, not so much, if they're able to do things electronically. And we've actually had a number of different, I'll call them virtual agencies in a sense, come to us because they like our accelerated underwriting program, which for a lot of situations will avoid the fluids, which you had also talked about, and as well, people can come to us directly for the same type of an experience. So we're very optimistic about I think what most people on this webinar are interested in, which is finding better ways to deliver life insurance to people, and to move away from some of the traditional ways of doing that type of a delivery.
Excellent. So we have a couple of prepared questions. We're certainly happy to take questions from the group. We encourage it. So please either use the Slido or just the Zoom chat. You can direct it directly to me in the Zoom chat, and I'm happy to take the questions that way. Or if you've got the Slido up, you can use that as well. So Bruce, just to get started, what are you seeing in terms of changes in the buyer situation now and in the recovery? I talked a little bit about life insurance as part of wealth management. How are you thinking about that from your position inside Vantis?
So, right now, I think there's a couple of different considerations for people. We have people who are out of work. So, they're going to be struggling to, pay the electric bill, forget about paying their life insurance. And so there's certainly, some concern about those people. there's been some mandated extension of payment periods. So normally with life insurance, there's a 30-day grace period. And then most company practices give you, an additional 15 or 30 days in which to make your payment. We're not looking for people to lapse their policies. And most states have mandated longer periods. We actually got ahead of it by a couple of weeks, and we right now are allowing up to 90 days for people to make their premium payments. So for people who are struggling for whatever the reasons are because of the pandemic, they've got more flexibility. And then we're also going to put something in place where they'll have time to pay us back, so to speak, which is kind of unusual. It's not really the way most life insurance companies have operated. You've got your period to pay, and that's kind of the end of it. So, that's one end of this thing where, we have some people who are going to have some difficulties, and they may or may not be able to keep their policies in force. Hopefully they can. What I hope comes out of this is that, we as people who work in the life insurance industry, we believe in the products that we provide. Things happen to people. I think everybody likes to think, well, I'm going to live for another 50 years and I won't really need life insurance then. So, why bother? But the fact is what the COVID pandemic brought out is that doesn't always work. It doesn't always work that way. There are surprises in life. And I'm hoping that people will start to really see the value of life insurance and make it more of a priority. For some people, it's not really affordable under any measure. For a lot of people, though, it's a matter of choices, and I hope that they'll make it more of a choice in the future.
Do you see there being changes in the product needs? Do you think customers will be looking for different types of products in the after times?
Definitely. So whenever there's, you don't have to go to a pandemic, you can just go to any sort of stock market upheaval. There tends to be more of a desire for products with guarantees. So for most people, term insurance is going to get the job done. It's inexpensive. It covers, it covers you in case something happens. So it protects your income, so that your family will have something if something unexpected occurs. And I think it will also help with whole life sales, which is another form of guaranteed coverage. Pay your premium, it's a guaranteed premium, and it lasts for life. So I can see from the life insurance side that there may be some movement away from products that were more based on market performance, like variable universal life or indexed universal life, things like that, and more of a flight to, the guaranteed type of products. There was a lot of that type of activity after the financial crisis in 08-09. And I also think fixed annuities where, you pay a premium to the company and you have a guaranteed rate of interest. I think that will also play well in this environment. And all of those, I believe, can be sold digitally. They don't require, in my opinion, an agent. People might need some help, and it's important that a company would provide that. But I think any of these products are simple enough for people to understand if laid out properly, so that they would be able to make those kind of purchases digitally. So again, I think that's something where where we're heading is where some companies are heading certainly is it's to their advantage. Simpler products are going to come into vogue, and they also have a nice digital process to go through it.
Mm-hmm. Absolutely. So in the current situation, here's a question for the attendees. And I don't know if you are comfortable commenting on this for Vantage specifically, But was it necessary to have a business conservation team that was making outbound calls and emails to help people understand that they had a certain grace period and that the company was going to be able to stand by them despite their circumstances?
Well, I can tell you that we haven't had to do that, and I can
Mhm.
also tell you that we haven't seen much lapse behavior different from normal. I think people are taking advantage of the extra time that they have to pay. Certainly, if they can afford it, they bought the insurance for a reason. They shouldn't, they shouldn't be thinking about lapsing their policies if they don't need to. And that seems to be the case so far. What I think will be more interesting is as we get later in the year and as these periods start to expire, so right now they don't have to make a payment and they've got other things to worry about and so forth and so on. When we get to a point where they now have to start making payments again, then we'll start to see what the real behavior is going to look like.
Right. Right. We also had a question about core systems and lapse policies. And one of the challenges for many insurers is that they're dealing with legacy environments, especially around billing and policy admin, where it's difficult to make those kinds of changes on the fly. We've certainly seen that with some of our clients that are operating in a legacy environment. I don't think it prohibited anybody from being able to do it, but it certainly took a certain amount of work and effort at some of our clients. I don't know if there's experience to share in terms of how the systems modernization has enabled you to adapt quickly. I know that Vantis has made some investments in a lot of their systems, especially around digital capabilities and flexibility.
Yeah, I would say our admin system is not the most modern system, but it's flexible enough for us to manage most of this. So extending the grace periods was a fairly easy thing for us to do, and it's something we can easily adjust to. The kind of the payback period on past due premiums that we would do, that we're sort of working our way through now. We're trying to figure out how best to manage that.
Mm-hmm.
So I'd say it's a mixed bag for Vantis.
Right. Yeah, and I think you're certainly not alone in that situation. I think a lot of life insurers are dealing with similar types of issues. How do you think folks are dealing with their distribution preferences at this point? How do you see them wanting to engage with sellers? And on the flip side of that, one of the questions that came in from one of the attendees is, how do you see agents and brokers changing their approach during this period of no contact and social distancing?
Some agents and brokers, I'm sure, are having an extremely difficult time with this. We've had conversations with agents and brokers who do business by paper, and they're going to have a great deal of difficulty, throughout this period, and and then afterwards, if companies start to move away from that a little bit. I know it's so our parent deals more with agents and advisors than Vantis does, and I know that they have done a pretty good job of adapting to the social distancing, using the technology to engage with customers. So I think it's all over the place, really, in terms of how companies are dealing with this. I've been at some industry conference calls in the recent weeks, and a lot of the companies were saying that their sales are down. And it's because of exactly what you're describing, Matt, which is that you can't get the face-to-face. It wasn't so simple to, adapt to, a new environment that rapidly. And a a lot of the companies that are agent dependent are seeing declines in sales. The digital side, what I'm hearing more and what I'm experiencing is an increase in applications.
Yeah, absolutely. I think, again, this crisis is separating folks who were kind of getting along without adapting and those who had adapted and were ready. And I think we see that on the carrier side, we see that on the agent broker side. There is a real separation of, you know, those who were kind of coasting on previous business practices and those that were investing for the future.
I will say, though, I do think there's going to be a place for face-to-face in life insurance. So, for example, larger, more complicated cases, and especially with older people, they're going to be more comfortable getting back to some of the face-to-face. But for a lot of insurance, I think the real big advantage to this this crisis in terms of insurance is that both the customers and the companies are able to see what can actually be done.
Mm-hmm.
You know, there's really no reason for somebody who just needs term insurance to have to sit down with an agent and fill out paper forms. And the other part of it that you had addressed was the getting the fluids. So exams and fluids are very difficult now to get. There are companies that do that for insurance companies, and they're still doing business. They have protocols around how they would enter people's homes. They're very clear about it in terms of the isolation techniques they've used to ensure that, you know, they're not bringing anything into people's homes. And there are some people who are okay with that. Some customers are okay with that, but a lot of customers are just like, I don't think so. I don't want anybody in my house right now.
Mm-hmm.
And so trying to fulfill the requirements that do exist today is very, very difficult. And it does highlight the need to try to find the data, of which there is plenty of, to use in lieu of, you know, fluids and examinations to come up with a good profile to underwrite people by.
How do you think the service model is going to change post-crisis? I mean, we've already seen a lot of carriers change their philosophy about whether they are the primary customer servicer or the agent is the primary customer servicer. Even in companies that are agent distribution committed, they are starting to take a greater role in post-issue servicing directly and not requiring people to go through their agents for service. Do you see that continuing to evolve in the post-crisis era?
Yes, that's a tricky one, Matt. You know, there's always been this tension between the insurance company and the agent over who is whose customer.
Mm-hmm.
So, you know, for example, you know, when you're doing business through an agent and they go and attract a customer, they say, well, that's my customer. Well, okay, well, but they bought our policy. And we need to be able to reach out to them, and we need to have communications. A lot of times agents want to, you know, structure the communications. They want to be involved with all of that, and that's perfectly fine. So, you know, that's part of it. That's, you know, maybe a cultural thing that evolves. It's hard to know really how that's going to play out. Certainly, you know, now with the direct-to-consumer process, you know, we're not always using agents to, you know, to acquire business, and we have a more direct connection.
Sure.
Certainly, the InsurTechs tend to view the customer in the same way, their customer rather than the insurance company's customer. So it's going to be a little bit tricky to see some of that stuff change. Some of the things, though, that I can see changing is some of the other ideas that you had mentioned. You know, there are paper processes within the insurance company, and some of those kind of service things, I think, you know, will change. You know, when we went to the COVID protocols of work at home, we found that most of the things we were doing worked pretty well, but there also were some paper processes that we couldn't get away from. So it helped identify, you know, some of those kind of things for us. And I do think it'll continue to evolve away from using paper and things like that.
So switching from market to company operations for a minute, you know, now that the industry has had this forced experience in working from home, what do you see as the future office strategy for the industry? And do you think that this experience is going to change people's approach to talent acquisition and management?
So let's take the talent acquisition. You know, there's never anything that's good that comes out of something like this in terms of the problem that's been created. I mean, you can't see an upside to having had the COVID virus infect people all over the world. However, if there is something good to come out of it, it's the companies have come to realize that you can effectively work out of the office. You don't have to be in the office in order for us to be able to conduct business, to sell insurance, to service policies, to do all the things that we do. And, you know, a lot of companies have been very, very reluctant to allow remote workers. The fact that they now can see that people can work remotely, if the companies, you know, learn the lessons that, you know, they can now see and they continue to apply them in the future, they now have the whole world to look for people. They're not limited to their locale, and they're not limited to people who will relocate. So they really truly can get the best and the brightest and be able to work very effectively. So I think the best thing that's come out of this whole thing is the idea that, yes, remote can work and you can now get your talent anywhere in the world. Find the best people and have them work for you.
Matt and Bruce, just so I can interject, we have probably time for one more question, then we can jump into the other sessions. Thank you.
Sure. Well, actually, I wanted to close. Obviously, an issue for everybody on the call is, you know, what do we think that the current environment will have as an impact on insurers' appetite to work with InsurTechs?
So I think you summed it up pretty good in your opening remarks. The companies right now, from what I can see, are concerned about exactly what the outcomes are going to be for them with regards to this epidemic. Are they going to see a lot of mortality claims? Are they going to lose a lot of money on their investments? What exactly is going to be the impact on their surplus? And they're more in a mode of protecting their surplus. And so, to your points earlier, Matt, I think they're going to want to be much more selective and choosy about who they do business with, and they're probably going to want to see a greater proof of concept before they invest their money.
Thanks. Arlen, we'll hand it back to you.
Thank you. Appreciate that, Matt and Bruce. There was a lot of good nuggets in there for people to get and understand. I mean, one of the biggest ones that I got out of it is just how it's going to change for the future, that face-to-face interactions that potentially some of the older generation needs to now embrace more of this digitization of the industry. So really looking forward to that and appreciate all the comments that people actually have presented. So we'll switch gears here, and I would like to invite Paul Gagliotti. He is the founder of Arbor.ai, which is an artificial intelligence commercial insurance enabler. With that, Paul, I'd like to say some few words.
Oh, Thank you, Arlen. So thank you, everybody, today. Harbor AI is here to solve one of the more complex problems in our industry, and that's largely that commercial lines insurance transactions, they suck for everybody involved, right? There's a lot of paperwork, a lot of problems, et cetera, with those particular products. Slide, please. So our platform solves a lot of these problems using artificial intelligence. So our platform is frictionless. We move data seamlessly from insureds, brokers, and carrier partners. It allows us to be transparent, so the insureds understand what they're buying, the carriers know what they're selling, and the brokers are able to really understand the products and the nuance between them. And it's liquid. We're able to match carrier supply with insured demand. Using intelligence as well, we're able to get rid of the forwarded emails and endless PDF attachments. Slide, please. We provide a better product experience for our insureds. So they get better pricing, more options, it's online, it's faster, it's way less effort. Our brokers get access to more products with a higher commission payout for less work. And our carriers get appetite-driven deal flow, which is consistent, and they have complete applications. So they can lower their expense ratio and ultimately other costs in the insurance distribution process. Slide, please. Our model is completely transactional, right? So we don't charge SaaS fees, lead generation fees, maintenance fees, or integration fees. We work off the commission that's given from our carrier partners, which enables us to provide a really unique experience for everybody utilizing our exchange. Slide. Our exchange age participants, and you can see here on the, on your right is a big list of those participants. We're doing 11 different carrier integrations, different APIs, brokerage, all sorts of different stuff. We see deals of all sorts. We also have, what we believe to be the world's first AI-driven MGA, which we're launching in the next month or so. And several carrier pilots to help them streamline distribution of some of the more complex excess and surplus lines products. As our proof traction, we were just admitted into Plug and Play's InsurTech Batch 8, which is one of the industry's great accelerators, just like here at Harford. We have over 180 brokers signed up and validate our user experience through our brokerages, through Google campaigns, and other broker transaction deals. Slide, please. Our technology is proprietary AI technology developed for insurance. So we have an automation platform to process real-time interactions. And we've created a new insurance data standard encoded for artificial intelligence. Our AI algorithms handle these transactions, and we use a combination of our proprietary technology and open source tech like TensorFlow, Spark, natural language processing, and natural language generation. Next slide, please. We use three main kinds of artificial intelligence. We're able to use a knowledge graph that helps us represent that insurance knowledge. We use machine learning to optimize processes and decisions, and we use logical inference to apply underwriting guidelines and ask underwriting questions. This allows our carrier partners specifically to really wrap their heads around what the risk looks like. Unlike a lot of other platforms, we're able to basically collect more structured information in a shorter period of time. Slide, please. So basically, what you're seeing here is a sample of a flow. So we can collect that insured data. We can then enhance it using other broker provided information, third-party information, and flow that information based on carrier appetite, and then provide those quotes to the insured and broker. This allows the process to be largely seamless, and we're able to do that with even some of the more sophisticated excess and surplus lines transactions, like that for medical device product liability. Slide, please. So myself, I've been in the industry for 10 years. I've been a broker. I'm a certified insurance counselor. I've been named top specialist brokers, top under 35 brokers, top 100 brokers, to name a few. My partner has 20 years of artificial intelligence experience in engineering. Our technology was developed out of insurance data standards, but predominantly off of architectures he had done in the drug discovery and medical fields. We also have a stealth investor who has approximately 35 years of experience and is currently leaving his role as a senior level executive at a carrier with experience of creating an MGU, rolling that into a carrier that was ultimately acquired by another carrier. Slide, please. So like right now, we're currently in the middle of doing our first non-family and friends capital raise. Our first family and friends round was approximately $1.6 million. We're currently doing a Series A for $6.8 million. We have a pilot launching with a carrier in the next couple of weeks, in addition to our AI MGA. And this situation with COVID being that it's part of one of the topics, I really wanted to bring this up in here. The work from home ramifications now of brokers and agents in the industry are a lot more complex than they were previously going to be before, where maybe you had people sitting behind firewalls, et cetera, and now they might be using their kid's desktop computer to work on deals where information can be potentially compromised. So with us, what we're able to do is work with partners like one of ours that you saw on the screen before, a cyber partner backed by Markel, to go ahead and help to streamline a lot of those things. We're also working with other companies, particularly one called Testif, that helps carriers to understand better photo inspections and who took them. So happy to reach out with anybody. I appreciate the opportunity here. And for those who saw me earlier this week, they could have seen I had a lot longer hair and a beard. But after talking with Devin from Beasley, he said to really impress James, if I shave my head, I'd probably get a Beasley appointment. So James, I have to say the ball's in your court. So, thank you guys again. I really appreciate the opportunity. Feel free to reach out anytime, any carriers, brokers, et cetera. We'd love to chat with you guys.
Awesome. Thank you, Paul. Really appreciate that. I know we didn't have time for questions for Paul, but you guys can reach out to Paul directly. He had the contact information on the previous slide as well. And Paul, you could also probably add it as part of the chat box as well. So before we switch, I do a quick bio with Jake and James for our next topic on the property and casualty insurance. I would like to inform everyone again to please use Slido. Make sure you choose the second room for this time. It's instead of the life insurance, should be the property and casualty session. In addition to that, Jake and James do have pre-planted poll questions. So for folks, please do answer that poll at your earliest convenience. So brief introductions with Jake Sloan from Appian. He's an industry leader. He's worked with various Fortune 500 companies, while he's also heading up a $150 million P&L. That's quite impressive. And then he's done all kinds of different things from various verticals in strategic planning, process improvement, and true operations management. His co-partner and presenter today, it's the head of digital platforms at Beasley, James Wright. And James has an extensive experience in optimizing underwriting teams, especially trying to digitize various processes using various agile methods, as well as various technology improvements. Along with that, currently one of the positions with James, he is focusing on doing simple risks better and faster, smarter underwriting as part of his role at Beasley. With that in mind, I would like to turn it over to Jake Sloan from Appian and James Wright from Beasley.
Perfect, Arlen. Thank you very much. Appreciate the time today, and good day to everyone globally. So Jake Sloan, Appian Global Industry Leader for Insurance. Appian is a enterprise low-code platform that really enables you to build powerful business applications very quickly. And speed was obviously very significant prior to strained conditions, and the pandemic has certainly exacerbated that. So I'm joined today by James Wright. And James, if you could please introduce yourself, tell the audience a little bit about yourself and your role.
Sure. Hi, everyone. So I'm James Wright. I've got two roles at Beasley. First is I lead the US technology team from here in Connecticut. And also I lead digital transformation globally for the group. So we're about a $3.5 billion specialist insurer. We operate on a surplus and admitted basis in the US. And obviously we're one of the Lloyd's syndicates in London.
Perfect, James. So, and clearly my home office digs are not on par. You look like you got a band back there. That's fantastic, man.
I can't play any of these instruments. It's all my son, but yeah.
That's excellent. I have this little picture I thought nobody'd ever see, and well, here you go. So, well, hey, let me set the stage for us here. You know, we're several weeks into this. You know, the clients that we work with, you know, we're seeing really that they are working to ensure that the agents have access to systems, employees and customers have access, while we're both, of course, remaining safe and you know, working from home. Making sure that agents are able to write new business, get paid, stay on track with their book. You know, our customers able to, you know, really have access to the products that they need. And then, you know, we also see that this event has really caught a number of carriers kind of not fully prepared from a cloud migration perspective, if you will. It sort of begs the question as far as, you know, whether this is going to establish new paradigms. Most certainly it will going forward. Commercial P&C especially, we're seeing that relies a lot on agents and distribution. We're seeing that underwriting has, of course, slowed down due to the level of deep interaction. And to coin a very industry-specific term I just took away from Paul's presentation, it sucks. And so Paul, I like that. Shout out to you, because it does. It's very difficult, on a serious note, to go back and forth, you know, when you're out of that kind of optimized office that's not necessarily as optimized as you want. So a lot of questions, of course, around coverage, you know, especially the topic of business interruption, what's covered, what's not covered versus diverse exposures. On the personal P&C side, we're seeing that the frequency of losses, of course, down because people aren't driving, create a lot of capacity from the claims teams. And the magic question, of course, is not if, but when it will return. Especially as you see here in U.S., of course, going into the holidays, gas prices are down, summer holidays rather, gas prices are down, and of course, you know, storm seasons and whatnot. So how fast it's going to come back to make sure that the insurers are staffed appropriately. So kind of, you know, that was the optimistic background. James, let me kick us off here with, you know, kind of what from your perspective have you seen, your observations of the business impact of you know, the COVID-19 related to organizations, you know, internally or industry at large?
Yeah, thanks for that. So I'll start the little story just from a meeting a couple of weeks ago with two senior underwriters in London, this was, and the example they gave was, hey, James, we need some help. And I said, what's the problem? Well, you know, I'm getting WhatsApp messages, text messages, emails, phone calls, and believe it or not, I'm having brokers drop off paper at my front door for me to work on and drop back at the end of the evening, they'll collect. So in terms of opportunity for people like us in our industry, I think there's opportunity aplenty. But in general, my observation is everything that existed before COVID exists after COVID, but amplified. So if your company was struggling before COVID, you're probably now looking at going out of business. If your digital transformation was stalled before COVID, you're most likely struggling to operate the business well now. And if you have bad processes or broken processes, it's likely that your clients are really suffering. And I think the opposite's true as well. If you're in a really well-run company, your employees and clients now value that more than they would have done before. If your digital foundations were solid, you're probably getting some kudos from your clients and customers to say, oh, wow, this stuff is phenomenal. And some of those cultural boundaries are being removed. And, you know, if your process and your methods are solid, you're probably ready to thrive when the economy does turn back on again. So there's some of my high level observations so far.
Yeah, no, that's great. You know, one of my favorite things in life from a leadership perspective is that, you know, your circumstances reveal you. And I think from a business environment, this certainly couldn't be more true, because you know, spot on. That's what we're seeing, as well as you were in a good spot before this, then, you know, as well as you're playing catch up. So, you know, the need for flexibility and to be able to, you know, rapidly adapt to these circumstances as they change. I mean, we're seeing a number of these, you know, whether it be from how you're interacting on the front lines to how you're, you know, working, you know, pieces of paper being dropped off, or the regulation aspect of it will. You know, from the Appian perspective, you know, the platform itself really enables that speed through a low code perspective, and, you know, not overlooking the fact that a very small project can have a very, you know, immediate and incremental impact. So, you know, kind of with that as a backdrop, you know, I like to kind of now pivot to impact it's having on the industry, as far as, you know, I just watched a presentation from Sean Kevlin CEO of III. He was talking about how, you know, the cumulative policyholder surplus at the end of last year, just over 800 billion, 8 times what P&C insurers had already paid for 2017's natural disaster. Yet here we are, events and large, you know, gatherings have been canceled. You know, the NBA, England's Premier Soccer, every Walt Disney theme. I mean, you go on, the list is significant. You know, what impact has this had on Beasley from the bottom line, and you know, how are you responding from a staff and a colleague perspective?
Yeah, it's a great question. And obviously, it's not a great situation. A lot of small businesses are really hurting, and obviously there's a lot of other issues out there. But to give the financial side of it, if I can focus on that for a moment. For Beasley, you know, we're looking at about $170 million of loss, and that's coming from 2 areas. I'll just give some real world examples if people are interested. One of our products is event cancellation, and that does have a communicable disease coverage on it. So if you imagine you're planning an event, you've got a lot of upfront outlay like tickets or stage design and marketing. We'd obviously be looking to pay out for some of those losses. So that's some immediate loss, about $100 million there for us. And then some of our business interruption, property coverage has a BI endorsement on it. So again, we've got about another 70 million of loss there on that side. The one common area that most markets and carriers are struggling from is obviously investment income loss. And for us, you know, at one point this year, we was 100 million positive, and now we're in the negative on that. So depending what happens in the next few months, we'll see how carriers survive. We are seeing our brokers, and I think Matt discussed this, and Jake, you did as well. We're just seeing this week brokers starting to find it hard to continue to efficiently place business. I think that's got a couple of impacts. You might see the business being a bit more sticky, it not being shopped around quite as much as it was before. But for certain lines where you need a tier, you know, of coverage, like a large D&O, it's going to take longer to place that risk just to get all of the coverage in place. Now, on the flip side, we're also seeing opportunities. And as a specialist, that's what we do. I'll give a couple of examples if you like, Jake, just to make that real.
Yeah, please.
Yeah. So our digital health space is obviously thriving. Things like virtual care, telemedicine, more and more medical facilities are doing remote diagnostic over video or other methods. So again, we've got a product for that. We've got a high demand. And also life sciences. There's a lot of tech startups that are looking at new ways now of quickly generating tests, or again, remote diagnostics. They've got to balance the risk and the tech together. They're normally quite tech heavy. They don't always see the risk. So again, there's a good opportunity there for us to help the innovation industry continue. We're also seeing, and this is a strange one, but a lot of companies are trying to claim on their cyber policies for coverage that's not really there. So we think as companies become more digitally dependent, that cyber coverage is going to become more critical. And we are seeing some rate in that regard as well. The other one, which is interesting, is we're seeing a lot of management liability demand for companies that are starting to manufacture PPE or distribute PPE that historically haven't, and they obviously don't understand some of the risks that might be around selling or manufacturing those types of products. So our management liability team is seeing some good demand there. The last one is really around the Pandemic Risk Insurance Act, which I think most of us are probably old enough to remember 9/11 when TRIA came into effect, and the government's working on a similar concept for the next potential pandemic. We're actually working with Marsh to see if we can contribute to that. So that's some of the insurance product sides. Apart from that, from a people side, we've offered our employees 3 personal well-being days in the next couple of months. The stress and demand on individuals is high, and we're helping them that way. The communication from our leadership team has been fantastic, and they've embraced digital in a big way for that. And then we have got our mental health and well-being community. So, you know, on the product side and the premium side, I gave you the facts there, but we're also focused on our own people as well.
That's fantastic. And you know, it's interesting. I think about when California launched the California Consumer Privacy Act, CCPA, you saw, a lot of interest, of course, from Appian, to Appian on collecting consumer privacy, but you also saw the brokers, really start to sell additional coverage to small business and others. So it's interesting to hear, PPE and other coverage. On the people side, from the Appian perspective, early days, RCO held a town hall talking specifically about preserving our feeling of Appian community. I rave about Appian. I mean, just great company. And it was really fantastic to see the leadership team come right out and, of course, talk about balancing the business, but first and foremost, preserving the culture in the community, even if we're distributed, setting up virtual lunches, setting up, just no business topic, just bring your lunch, eat like you would if you were in person. So it's great to hear that Beasley is also focusing on that as well. So, organizationally, you're also starting to see these different shifts, as it relates to, protecting colleagues as they go from, this virtual environment to return to office. We just launched last Friday a workforce safety and readiness application. And, that's a good example of how we see being able to adapt to protect colleagues as you start to go back to the physical office whenever and wherever that may be. So there's certainly other aspects that fall onto this. So next question for me, kind of how has your team rallied around this in the sense of certainly unprecedented, and I've got to think that they stepped up, but any examples for the audience here on kind of where you're seeing that from your own team?
Yeah, so there's two focuses here. I think I won't talk. The first one is amazing result, but I won't talk about it too much. But it's the digital employee experience. Our infrastructure team and service desk team have done a fantastic job, and I think our employees have been shocked in some regards at how well that's worked. And again, I think it's a great opportunity for technology professionals to show their capabilities there. But again, for any company that hasn't had that in place, it's very difficult now to quickly catch up. So that's one area. I think the biggest thing that we've continued to do is sort of persist in delivering value through this time of volatility. And the thing that I can attribute most to helping the business and our team in this is our agile adoption that's been ongoing for a couple of years. But having that wartime effort execution culture and the ability for squads to pivot relatively quickly as priorities have shifted in the last couple of months has been phenomenal, really. The second part of that is being able to operate with globally dispersed teams or people working from home in this scenario. A lot of the agile methods and the ceremonies have served us really well, so using tools like Jira to make sure work's digitally published everywhere, and then having a disciplined set of meetings that keep people connected has been really good. I think the one area we're developing strong is the concept of product ownership. So running your insurance technology team with a technology product mindset, and again, understanding value. So we spoke a little bit today about brokers starting to really find it difficult. And one of my principles is talk to me about the client problem, be client-centric. All of what we're doing, whether we're building APIs, agent portals, making processes more efficient, it really needs to result in the customer seeing some increased value from that. And I think sometimes for many of us, we can get a little bit lost in, legacy systems and internal politics. I think that's helping us a lot at the moment, specifically. So
that's fantastic to hear that, especially when you think about, the agile methodology is so important. It's very refreshing to hear, whether you're full agile or you're, wagile or somewhere in the middle, but, it sounds like you and your teams have lined it up, and that's really great, especially right now, like you say, during this wartime type, kind of culture. Speed is definitely a differentiating factor. On the video front, interesting point there. We are seeing quite an uptick in interest from our intelligent contact platform that incorporates video. So we're able to extend, from the mobile device and keep the broker in the loop, the back office, admin teams from our intelligent contact center. And so it's nice to be able to say, here's the nature and the product of insurance, but also then, to your point, model what the customer needs, provide that for them, but not wait, for for 6 months or a year to deliver it, to be able to deliver it very quickly. We do oftentimes what we call the Appian guarantee, which is an 8-week guaranteed delivery. So so with that, let's turn to the poll if everybody wants to at this point. The question that was out there: where do you expect the pandemic to accelerate your organization's digital transformation and change? And that was a little bit of a trick question with that bottom answer. So I'm glad to see that everyone looks like resoundingly making sure that working where is truly possible, and then focused on cloud-based workflow. James, I'm curious, for you, is cloud, is Beasley, been able to excel there, or is that a challenge, if you don't mind talking to it?
No, so I mean, it's accelerating our adoption of cloud services. That's without a doubt. Whether it be Office 365 for collaboration, or as we sort of start thinking about recession modeling now, and leveraging some, we can talk about that if you want, but leveraging external data to enrich and make our underwriters smarter. Again, using cloud there for the variable compute is a big part of our strategy. I think this is going to accelerate our cloud adoption, specifically with regards to distribution. Connecting with brokers digitally remains, in our market as a specialist, challenging. I think this is going to change that for the long term.
That's great. And what about, from a data science, you talk about the recession model or recession, modeling and planning. I mean, are you invested the same in, your data scientists and data science at large, or, has there been any change there?
Yeah, there has. So I think the relevance of data science has increased. So let me just talk a bit about, I think in my bio, we put down the term faster, smarter underwriting, and everyone's focused on the smarter bit, right? Machine learning and modeling. But the reality is we've still got a major data problem in this industry. The quality of the data that we get is not accessible, or it's not great quality. Application forms, emails, the client data is all over the shop. And that client data is so important in terms of producing future smarter models. So the faster bit for us is focused on using products like Harbour AI, as an example, to enrich client entities with data that gives you a digital view of the client, feeding that through the process, the policy life cycle, and ultimately longer term, that can feed AI models to help inform decision support systems for underwriters. So it's a bit of a long answer, but I suppose, we've gone from, we're not big, right? We've gone from 1 data scientist to 4 on top of our actuarial team. And actually what I'm doing at the moment is trying to get a cross-functional team in place where actuaries, data scientists and data engineers are working together on a common set of problems. I think that's important with what's been going on recently. These siloed roles, data engineering, data science and actuarial in insurance companies is a little bit competitive. Trying to get them to work together and all got complementary skills, that's how you get real value. So for the recession model for next year, we've got our data scientists involved to see if they can bring in some fresh ways of yielding results. So I think, again, it's becoming more important. If anybody can come up with some pandemic models in the future, that would be fascinating as well.
That's perfect. It's a challenge to the innovation community here for InsurTech Hartford. So, I like what you said too about the speed. Next week I'm delivering a webinar with Ellen Carney from Forrester, talking about delivering value more fastly, delivering more value faster, through the low-code delivery model. And that speed, I like how you're putting those team members together to really innovate and keep them shoulder to shoulder, while also keeping pace of change with what's going on outside. So. Well, with that, if James, if you're good with it, let's open to the Slido. We've got about 6 minutes left here. We've got some questions in there for James Wright. What is Beasley doing to help your brokers in this difficult time? What are the challenges you are seeing with brokers?
Good question. Thank you for that one. So I'll give you an example of that Lloyd's problem I opened with. We're using a low-code solution there to build a booking application that will basically enable a broker to book a time slot with a specialist underwriter of their choice, automatically hooks them up with the WebEx, puts it in the calendar, makes that happen. That's one example. Another one is just continuing to invest in APIs and broker portals. We're actually going live next week with a live cyber API between us and a large broker. and that's going to fully automate the clearance and quoting for cyber risks via an API. So again, that's seen as a very positive thing from brokers. And apart from that, I think Bruce touched on it. Obviously, payment terms have been adjusted, to 60, 90 days, just to make sure everyone's still got some fluidity in the market. So, and we continue to look for new ideas. I've just come off an exec call today. I've asked all the focus group leaders, give me your pain points. It would seem that submission triage is a problem. We get lots of more inquiries, especially for COVID-19 cover, and it's sort of flooding underwriters. So I need to find a way of potentially using some clever NLP hooked up to rules engine to help filter some of that out. There's some examples.
No, it's great examples, and likewise, we see that on the endorsements or on the inquiries, being able to build those models such that the system can do the bulk of that lifting through either intelligent document processing, through embedded NLP, and being able to do that to maximize really the efficiency of the underwriter. And that kind of builds on this next question here. With the COVID impact on how underwriters interact with brokers, do you see the old way of working return to same level as pre-COVID?
No, to be in short, we've got an opportunity, I think, in the next 12 months to, I think Matt touched on it at the start of today's meeting. A lot of the barriers have been cultural to transform this industry. There hasn't been a massive catalyst. We haven't been disrupted by Uber. We haven't had the Netflix come along. That hasn't happened. This might be our catalyst. So I think some of the things that we do in the next 12 months, if we do them well, they'll stick. And for those that don't do them well, it's going to be a struggle in the future. So yeah, I don't see us going back. I don't know what the change will be. I'm definitely not going to try and predict the future. Everyone that does that gets it horribly wrong. But I don't see us going back to how it was before, no.
Yeah, I would agree. And I would say that our clients and prospects that we work with as well, likewise, the models, they're accelerating transformation plans. We're not seeing really anything that makes it look like it used to, if you will. One of my favorite, a little off topic, but related, one of my favorite memes right now is that poll on LinkedIn, who drove transformation for you in 2020, CFO, CEO, or COVID, and so that's yet another, we're seeing the same, that it's really driving significant changes, through this. So next question, looks like we have time maybe for one or two more. What IT business solutions have you implemented that have helped Beasley through this pandemic? What solutions do you wish you would have implemented? You talked about a few of them through the pandemic. Maybe we focus on what solutions do you wish you would have implemented? Yeah.
So I really wish that we'd digitized more of our products, insurance products. For those of us that are in the industry, we know how complicated the raters are and all of the endorsements that go with them. And especially if you're admitted in all 50 states like we are for all our products, getting all of that digitized to be efficient is a huge effort. We don't have enough of those products digitized at this point in time. So it still relies on people to process some of those things. I think that's an issue. We are completely paperless in the US, so I don't have a lot of paper, but a lot of the rules that run our products are still in people's heads. That'll be the one thing.
Yeah. Yeah, no, you're not alone there. From the industry, we see those processes, whether it be the digital delivery and the components, that was kind of low-hanging fruit. But to your point, it's really the endorsements, a lot of that stuff that really was more human-centric as it relates to the decision. We're able to collaborate. I mentioned it earlier, with our intelligence around the capabilities to take in from an intelligent document perspective, ingest that, determine the intent, and then we, through our rules engine, route that. And so we're really seeing more interest and more active collaboration around that versus pre-COVID. Yeah. So you're not alone.
That's the bit that's really special for me, because what we can't do is commoditize the products so they become standard. We are a specialist. Clients require personalization. Some people are trying to standardize the products and simplify them to a point they're just generic. At that point, they don't offer value to the client. The client or the broker actually likes some degree of specialization around the coverage. And that's where, for me, technology, data science should be able to kick in and help us. So they're giving away some of my secrets, but they're the principles that we're working on.
No, it's fantastic. That's why folks are retained today to hear that. So, well, lastly, maybe one more question here, and we'll take it back to Arlen. James, are today's IT priorities changing at Beasley due to COVID-19? Actually, I think we already answered a lot of that. Maybe this one, how do you see the evolution of cyber insurance post-COVID-19?
That's an interesting one. Obviously, we're a leader in the cyberspace. Most of you probably are aware, at the moment, ransomware continues to be rife, and this incident has created yet more ransomware and phishing attacks that we're responding to. I think what we're going to see is more on the services side, pre-breach services, continuing to become part of the product. So, there's all sorts of services that we already offer today, like phishing tests and, pen testing tests. But I think you're going to see an extension of those services to help companies become more secure. One of the things that we've all got to be aware of as well, as we build more digital businesses, we've got to do that securely. And I think there's a big risk that companies move fast at the moment and create security holes. So, for example, one of the issues that we had last year, loads of companies adopted Office 365. Why not? It's a great service, but they didn't put in two-factor authentication. And as a result of that push, we saw a lot of breaches related to Office 365 with our clients. So I think we're going to see more proactive advice to our customers as they rapidly digitize to make sure they're not doing it insecurely.
That's great. Yeah, must go quick, but not the sacrifice of security. So, well, to wrap up here, just in closing, appreciate, James, your time. Great to see that Beasley is thriving largely due to your digital initiatives and innovation. And to the community attendance today, thank you for your time. Speed is critical at this time. It's not the time to take on large rip and replace initiatives. And Appian offers an 8-week Appian guarantee. Steve Holt is your local, our local account executive there in Hartford. Would love to speak with you about those initiatives. And Arlen, back over to you.
Big thank you to Stacey as well. I mean, getting this all working in this crazy period. Good job, Stacey, making this
work. Great job.
Yeah. Thank you, Jake and James. That was a lot of great feedback. And I think one of the things that I took out of that, it was one of the first things you mentioned, James, that, if you look at pre-COVID and after COVID, what differentiates companies is those that truly have good processes, good people, and the technology supporting and backing them. So it's like in anything in business, right? In any kind of crisis, if you have good people that are supporting the organization, if you have some solid processes, and you have now the technology revolution supporting with you, then you'll end up being okay. And that's what amplifies the good companies and separates the good from the great and the ones that will not actually make it. So we've actually come to the tail end of our first digital webinar from InsurTech Hartford. I would like to thank all the speakers, starting from Matt Josefowitz, Bruce Friedland, James Wright, and Jake Sloan. You guys did an excellent job and provided us with some true great nuggets and pieces of information that folks on the phone can truly take away and leverage in their organizations, and what stuff to kind of look for. So really appreciate the time here. But none of this could happen without the support of our planning committee, right? So I'd like to, warm welcome to, thank you to Devin Sullivan, Deborah Politis, Stacy, of course, and Mark Roth. They did a fantastic job on the back end. And, usually when it comes to these events and the wrap up, we always have a slide at the end of all of these, just to kind of remind folks of the upcoming events that the InsurTech Hartford is actually placing, and some of the partnership that we have with other local organizations. So one of the major ones that's coming up, as Stacy mentioned in his opening remarks, is the InsurTech Hartford Innovation Challenge, and the submissions are ongoing right now. There are reviews that are actually happening. Then it'll go into the judges selection, and then there will be an online awards night similar to what we have here, Zoom event type of webinar, digital event, where it will culminate in as selecting a winner for all the 3 award pools for Beasley, Travelers, and the overall best for InsurTech Hartford, the greatest submission. Then we have the September 10th event. Usually, hopefully by then we'll all be out of the house and actually attend person to person. I mean, for a first event, I think this went relatively well. You know, I do apologize from the white background. You know, it's hard, but the drop ceiling wasn't really the most conducive, but I really appreciate everyone kind of following through. And then there's a couple other events that here you can follow. And with that, I think we've come to the conclusion of the end. Thanks, everyone. Hope you enjoyed it, learned some new things, and keep the discussions happening on social media, LinkedIn, Twitter, wherever that is. I think people need to discuss these issues on and on, because insurance plays a pretty huge role in impacting people's lives. Thank you.